In this video, I'm going to show you how to invest your first $1,000 into crypto and understand everything you need to know about crypto. I'm going to split this video into 4 different sections. The first section is going to be understanding the basics of crypto. Then we're going to move on to fundamentals. Then we're going to move on to technical. Finally, we're going to actually go invest that first $1,000 and look into portfolio building and risk management. I've personally been in the markets for nearly 4 years. I've seen everything you can see, all the mistakes, all the losses. And I wish I had this video 4 years ago. I wish I watched a video just like this one 4 years ago so I could avoid some of those mistakes. Without further ado, let's get right into it. Sport, getting an understanding of the foundations of crypto. What is crypto? How does it work? Why do you want to be invested into it, right? There's something that a lot of these influencers will not tell you, and that is that crypto right now is all speculation, it's all hype, and it's all manipulation. And one of the best things I heard in the Telegram group the other day is to trade the market. Don't let the market trade you. We're so early in this change or in innovation in the world that it's all moves off hype, right? Everything moves off these ideas of what people think, what people say, what governments do. So that's the first thing you need to clock into your brain, that crypto moves off hype. Crypto is all speculation. If you want to make the most money, you need to be positioned in the best speculative ideas. Blockchain is a technology that allows transactions to happen, and it's uneditable. There's no governments, there's no controls, there's no middlemen. That's why people move to crypto. That's why people move to the blockchain, to Web3, because there is that freedom available, right? And the good thing is that anyone and everyone can view the blockchain. You can view all the transactions that happen. You just can't edit them. The only way to, I guess, make an edit in the blockchain is to actually make a transaction happen. Something else I would like to focus on in this foundations of crypto is that there's different types of cryptos we want to be invested in. So obviously we've got the majors, so that's all the big stuff. We've got altcoins, or also known as alternative coins. We've got meme coins. We also have NFTs, and then we have like stable coins. These are like the different types of investments, right? Stable coins obviously are stable. They track the US dollar. They're backed by the US dollar. Majors just define the biggest crypto projects in the industry. So Bitcoin, Ethereum, Solana, Cardano, all this big stuff. Alternative coins are any alternative to Bitcoin. So all the other coins are considered an alternative coin. So whenever you hear people say altcoin, they just mean alternative coins to Bitcoin. One of the best advice I could give you before we go invest that first $1,000 is to understand the blockchain, understand what you're putting your money into. And this is something that came as an advice to my dad when I was first trying to get into the markets and into the stock market side of stuff. He told me, don't invest into companies, invest into yourself. Don't invest into Tesla, invest into your own education, invest into your own knowledge. And that's very important. You want to know what you're really investing into. Like right now, you're putting your money into those Web3 projects. You need to know what they are. Why are you putting your money into them? So what are the different ways that people make money from crypto? And there are 2 main ways, right? You either do spot, where you buy low, sell high, or you trade futures, you do leverage, where you can basically make money longing something. So you long, you basically say this asset is going to grow in value, and you make money if you're right, and you lose money if you're wrong, and vice versa. You can short something. So you buy at the top, you basically short something at the top, and you say this asset is going to go down in value, and if it goes down, you make money. If it goes against you, you lose money. So that leverage side of stuff is very high risk, high reward. But the simple stuff we want to get started in is spot positions, where you buy with your own money, and you basically buy stuff low and expect it or wait for it to go up to sell for a profit. So now that you've got a basic understanding of what is crypto, how does it work, how do people make money from it, let's move on to understanding the market. Let's move on to understanding the fundamentals, and then we can go on to actually investing that first $1,000. One of the most important things that you need to understand as a beginner, and you've probably heard this everywhere, is that crypto moves on cycles. Crypto flows and crypto moves around cycles, and money flows. Basically what I mean by money flows, money starts at the big stuff, at the majors, and they flow down the line to alternative coins, then to lower cap coins, then to meme coins, and then back around, starting back at those majors. And once you understand this is when you're really going to make money, because you're going to understand that, okay, this is how money flows, so I need to follow this flow if I want to make money. Think of it like a river. If you want to go somewhere, you have to find a river that's heading that way, and you position yourself in that river and you go along with it. So if you want to make money, you just look at where the money is going and where people are making money, and you position yourself in that area and you make money. So what this cycle is basically a 4-year cycle. Every 4 years, the Bitcoin supply gets cut in half. So how much Bitcoin gets mined and how much Bitcoin is available in the market, every 4 years, that gets cut in half. And over the past 4 times that it has gotten cut in half, what we have previously always seen is it has led to a bull run, and then it has led to an all season. By all season, it means it has led to this time period where alternative coins start performing really well after Bitcoin's performance. Another fundamental factor that you have to take into consideration is the fear and greed index. Basically, are the markets fearful? Are the markets greedy? The reason why you need to understand this, and the reason why I personally keep an eye on this always, is because I want to buy when markets are fearful, and I want to sell when they're greedy. It's a good way of actually telling, like, okay, the markets are greedy, the markets are scared, and everything is undervalued because everybody's scared, everybody is probably fear selling. This is when I want to buy stuff at a discount, especially like proper undervalued projects. Then when markets are greedy, this is when the hype is at all-time high. This is when people are really hyped up. Everyone, your dog, your cat, everyone's trying to get into crypto. This is when you want to start trimming profits. So the fear and greed index is basically a measurement from 0 all the way up to 100, and closer to 0 means it's fear, and closer to 100 it means it's greed. Another major fundamental factor to take into consideration is the altcoin season index. This is also another like indicator / index that goes from 0 to 100, and the closer it is to 100, the closer we are to all season, and then the closer it is to zero, the closer we are to Bitcoin season. Again, this is important because you want to know, what are the markets in? What kind of market condition are we in? Are we in a time period where it's Bitcoin focused, where money is flowing into Bitcoin, or are we in a time period where money is flowing into alternative coins? Let me give you a little bit of a life hack here, right? These indexes, they happen after the results. So they are a result of what actually happens in the market. What you want to do is you want to be able to tell this stuff, you want to be able to tell an all season before it happens. So you buy before the all season index reaches 100, before the all season index reaches 90. And the way to do that is to track whales, the way to do that is to track smart money, and the way to do that is to track this thing called BTC.D. So if you go to your trading view, you can open up this thing called BTC.D. It's basically a Bitcoin's dominance chart. It shows the percentage of dominance Bitcoin has in the market. And basically what we're looking for is we're looking for Bitcoin's dominance to start decreasing and then alternative coins to start increasing in dominance. So we want to see alternative coins start skyrocketing in market valuation or market cap, and we want to see Bitcoin's market cap kind of decrease in terms of that. We don't want to see a dump, we just want to see a decrease in terms of alternative coins, basically how much of the market it controls, right? That is a clear sign. If we see that happening, we see that, okay, money is flowing out of Bitcoin into alternative coins. That way we're able to see all season before the index actually tells us all season. Because remember, the index tells you it's all season when it actually is all season, when everything is pumping up, but you want to be buying before they pump up so you can make the most profit possible. Again, in this section, I would also like to give you, again, link back to our thing that narratives drive the market. This market is all about hype and speculation, and narratives drive the market, and you need to find the narratives, you need to find the areas that is most focused and the most hyped around and the most talked about, and invest your money into those industries. And some of the areas I personally like to focus in is AI, DeFi, gaming, and RWA. To put everything together in the fundamentals section is that market cycles move every 4 years. They happen on a 4-year cycle where we see a bull run, afterwards we see a bear run, and then we see a bull run, and it has repeatedly happened for the past 15 years every year, right? Bitcoin starts halving, we see this bull run, and then for about a year and a half we see a bear run, and then again for another 2 years we see a bull run, bear run, and it just has repeated over and over again. And one of the things that a lot of people don't really focus on, to a lot of influencers, is that macro is the bigger picture. What happens in the real world is the bigger picture. What happens in the real world is actually what affects the markets in the real world. So we've got a basic understanding of what the crypto market is, how it works, and how the cycles work, how bull runs and bear runs work. Now, how do we find out where do we actually put our money, right? So I'm going to walk you through a quick guide on how to research crypto projects and how to find those good projects. First factor in this is narrative. Again, I want to link this back to narrative. You need to go find crypto projects in the narrative that's the hottest. Don't try to go find that unique project. No, that might do you no good right now. You need to go find projects that meet the narrative, that meet the hype. So some of the main stuff what you need to look at when doing a research, when doing a crypto coin research, is the tokenomics. So how is the token, how the supply is distributed, where it's locked, when it's being unlocked. So have a look at the white paper, have a look at the website, have a look at the teams. Who is behind this project? Is it a reliable team? Is it people with experience? Is it people with real, is there real people behind the project, right? Sometimes they put AI generated photos. Check, do they have any good partnerships? Do they got any VCs? Do they got like Solana backing them? Do they got Ethereum backing them? All this stuff really affect how a project performs. Again, don't forget the bigger picture. The bigger picture is, does it fit in that bigger narrative? Does it fit in the hottest narrative right now? Is it an AI coin? Is it a RWA project? Is it a DeFi project? Because if it doesn't meet in the biggest hype, one of the best things I heard on Twitter the other day is, if there's a project solving the issue for cancer, if it doesn't meet the hype right now, no matter how big of an issue it's solving, if it doesn't get any hype, if it doesn't get people talking about it, if it doesn't have influencers backing, it's not going to give any good returns. Because that's the sad reality. That's what this market has come to. Again, you want to do research around the actual project. Is it actually doing something, or is it just saying they're doing something? There's a lot of projects that are saying they're doing something, but they're not doing it. So they might, give you a return through the bull season, but what they will end up doing is they die down or they dump on you, and it will never come back. Like after 5-10 years, it will never come back to the prices it is at today. Again, I want to say something here before we move any further, is that 95% of crypto projects that are in the market right now will all dump once we go into a big bear season, and most of them will never come back. You need to understand that, and that is the harsh reality, and that's why we're going to focus on the next section on actually portfolio building and taking profits. I've seen this over and over again. Random crypto projects pop up, they run through the cycles, right? They give good returns, but once they dump, after no matter how many more bull cycles they are there, they will never be able to, make that comeback to all-time highs like the proper projects. Like, yes, Bitcoin dumps, but the next bull cycle, it runs even higher. But you need to understand that 95% of crypto projects, once they dump, they never come back. So for technical analysis, I'm not going to go too dive deep because I don't want to confuse you, and there's so much videos about understanding technical analysis. But I think one of the most important things you should understand, especially as an investor, if you want to be invested into a project, let's say for 6 to 12 months, 1 to 2 years, technical analysis is, a lot of people will say, not that important. And I agree, technical analysis might not be that important, but there is one factor inside technical analysis that is important. Before I tell you what that is, you need to understand technical analysis versus fundamental analysis, right? Fundamental, we're looking at what is the project, what is it doing. Technical, we're looking at the price action. We're looking at the chart. And that one factor that's really important is being able to tell, like looking at the chart and like, has this project ever performed good, right? If it's been a project that's been around for a long time, during the past cycles, has this project performed good? You also want to see, recently, has this project had this big pump, and am I buying the top? Am I buying the bottom? Am I buying at a good price, right? We don't want to be buying once a project has already done a 500% return. Now, the other factors to look into when doing technical analysis, you want to mark out your support and resistance levels, right? And you want a DCA. So this is really important when doing technical analysis. You set out the prices you want to enter a project at, and you wait once it reaches those prices, and that's when you buy small portions over a period of time. You don't dump all your money all at once. You basically buy $50 once it touches this certain price, then you say, if it touches a bit lower, I'll buy another $50. If it goes a bit lower, I'll buy another $50. And then if it's around this price range, I will continuously for a month buy $50 each week to see where it goes, right? Because if you buy it all at once, you're buying at that one price. But if you buy it here and then it goes a bit lower, you buy a bit lower, it goes a bit lower, you buy a bit lower, and then since this big pump, you had an overall lower price than if you just bought it all at once at that same price. By support and resistance, if you're super new to this, you need to understand that support is a place where the price holds, so the price like goes down to that level, but it continuously holds there, like buyers start kicking in and buying it up. And resistance is a level where the price has continuously gone there and it has started, a sell-off has started, and the price resisted back down. And some of the other factors you want to take into consideration is like, are we in an uptrend? Is the chart going up? Are we in a downtrend? Is the chart going down? Again, this is not a full trading course, this is more so getting you into crypto, so you just need to understand the basics, and that is that you want a DCA, dollar cost average, into projects at certain prices you set for yourself. And one of the best times to DCA into projects is during sideways market, during that accumulation zone. So whenever you see like prices move around the same range for a very long period of time, that's probably, you can track that, and every time if it's within this zone, every time it touches this support, you can buy a small amount, and then if this happens for a very long period of time, that's probably a very good sign. I've seen this with so many projects where it's this in an accumulation zone for like, let's say 3 months, 6 months, and then after it breaks out of this accumulation zone, it just skyrockets. Again, on TradingView, there's a website called TradingView. You can open it up and you can kind of do chart analysis, and one of the indicators I kind of recommend is adding a moving average, so it like gives you the average price of the asset you're measuring over a period of time. And what you can do personally is you can kind of set that to like a 50-day or a 30-day or a 14-day if you're trading moving average, and you can see, is this asset under its average or is it above its average? Meaning, is this asset undervalued or overvalued? Of course, it goes back to buying the fear. We want to buy stuff when it's undervalued. There's like a quote from Warren Buffett who says like, I buy stuff on a discount. I buy something along this line. Like I wait for stuff to be on discount, and that's when I buy. Like when he invests into companies, he wants to get the best prices possible. So to not confuse it too much, now we've got a basic understanding of what the crypto market is. It moves on cycles. This is how it works, right? And also got an understanding of what to look for when researching projects. That's like, make sure it meets the bigger picture, make sure it meets the narrative. And then finally, we've also got an understanding of like technical analysis. So we don't want to buy stuff when it's gone up 500, 600%. We want to buy stuff on a discount. And to find out those discount zones, obviously we can do very advanced technical analysis, draw our Fibonacci retracement tools and everything like that. But to give you a basic understanding of how to do good technical analysis is to basically set out your support and resistance levels and kind of find those discount zones, find big like accumulation zones, and that's when you accumulate. When price is accumulating, that's when you accumulate as well. So now let's move to the fun part. If you're still for watching, comment down below fun. But now we're going to move on to actually investing that first $1,000 and building a portfolio. So when we're looking to invest that first $1,000, of course, now we've done a research of like where we want to put that money into, why we want to put it there, right? But I'm going to give you like my thought process of where I would put my first $1,000 if I were as a brand new investor into the markets right now. To call this section building the portfolio. Let's get into building the portfolio. Some of the key principles I would personally like to follow here is diversification, risk management, and a long-term mindset. Especially if you're trying to be an investor into projects, you need to have a long-term mindset and not be affected by the small price dumps, because that's very normal in the markets. So I'm going to give you 3 different options of portfolios you can choose from. You can choose a conservative, or you can choose a balanced, choose a very aggressive portfolio. Now, to tell you the difference between these 3, a balanced portfolio, so that's the middle option, is basically where everything is balanced. 50% into your major coins, so that's your Bitcoin, Ethereum, Solana, all this big stuff. You have 30% into some good altcoins, and then you have another 20% to some high riskier investments, so small cap altcoins, some meme coins, and whatever. Conservative investment, you have 70% of your portfolio size into majors, so you have more of it into the safer options. Not saying that crypto is safe. Then you have the other 20%, 30% split between some altcoins and some high riskier investment like meme coins and smaller cap altcoins. And then an aggressive is the opposite. So an aggressive would be like 20% or 30% into your like major coins, because again, the thing with major coins is because they're so big, they've got so little room for growth. And then you want to put like 60% into alternative coins, into altcoins, big cap, small cap altcoins, where they've got a lot of room for growth, but they've also got a room for failing and never like making it that high. Yes, you can put the rest into like meme coins, because this is a very aggressive. You can buy some high risk meme coins, or you can buy some high risk alternative coins that are like $10 million market cap. Thing I'd like to mention here before we move any further is you need to understand that the higher the market cap of a project you're buying, it's just got less room for growth. Like if you go to this website CoinMarketCap and you check out the list of their coins, like their top 100 coins listed, right? Those coins, most of them are, let's say, $1 billion, $2 billion, 500 million, 600 million, $1 billion, $10 billion projects. The higher you go in terms of market cap, the less room they got to go higher. Like this, if a project is 10 billion, for it to 2x, for it to double your money, it has to go to 20 billion. So if it's 10th place at a $10 billion valuation, it has to go to 5th place or 2nd place or 3rd place or whatever on the list it is, and beat those other projects and take over those other projects and become a $20 billion project in terms of valuation to give you a 2x return. But if you were to invest into a project, let's say that's 100 million, for it to give you a 2x return, it only needs to go to 200 million, right? And then for it to go to 1 billion, just to, I guess, 10x return, it just needs to go to 1 billion. So there's that smaller room for growth, but it's obviously high risk. Personally, that's how I would invest my money. It's how I've been investing my money. I invested into projects that are under $1 billion or at least under $5 billion market cap because I want that high room for growth and I'm okay with the risk. My risk tolerance is very high, but you might be a very low risk person. So you want to focus into buying those major coins that are, let's say, above a 500 million, above $1 billion market cap. Number one rule, always buy the dip. Never FOMO into projects, even if you're late to the market and you see this bull run happening. Wait for a dip. There is always dips because you need to understand, for people to make money, they need to sell. And when they sell, there's dips. If you buy a project, you're going to obviously sell when you're a profit. So people who are really early, like I've been in projects for a couple, 6 months, 1 year, 2 years now, right? That I haven't sold yet. Like when I become big numbers in profit, let's say a 500, 600, 700% return, I'm going to sell. And when I sell, and other people like me who've been in this project for a long time, when they sell, there's that small dip where you can buy up. The rule I would like you to follow here is the take profit rule. So you always want to take profit in this ladder way. So every step up, you want to take a profit. You don't want to wait to time the perfect top of the market. You don't want to try to sell at the top of the market. A profit once you're up, let's say 50%, then 100%, then 200%, then 300% or whatever, right? Or it may be 10%, 20%, 30%, 50%. You can't time the top of the market. No one can. Trying to time the market is the number one way you're going to fail. So don't try to do that. Try to take profit along the way up. So now that I've kind of given you a full image of, okay, this is how I go about investing my first $1,000. You're like, okay, you're telling me what to do, but how do I actually do it? Let me tell you. So you want to go on an exchange. So there's different types of wallets you can use, right? There's a decentralized exchange or there's a centralized exchange. Decentralized means everything is decentralized. The whole decentralized, there's no connection, there's no governance, there's nothing like that. And then centralized, there's like a company behind that exchange that controls the crypto you own and everything like that. So again, since you are a beginner, you would start with a centralized exchange. Whether if you're in Australia, there's apps like CoinSpot. Again, linked in my bio, linked in the descriptions down below. You can get $10 free Bitcoin when you sign up. But you basically go there and it's like any other financial apps. You make an account first of all, then you make a deposit. And once you make a deposit, you can go exchange your dollars or your USD, AUD, pound, whatever you deposit into a crypto. And in exchange, you give the money, you get the crypto. And then when you sell, you do vice versa. And I'll try to put some videos on the screen right now to show you how this works. But basically you swap them around and then when you make profit, you swap them back around. Another great feature that I've seen on CoinSpot that you can use is setting up take profits. So you buy into a crypto coin and then once you're up, let's say 500%, you can set a take profit. You can automatically take profit and the position will automatically close once it hits your take profit. And you can set like multiple take profits. So you can say sell 20% of my position when I'm up 10%, sell the other 20% when I'm up 50%. That way you've got this automatic rules. And once you set these rules, you need to understand to follow them. Once you set rules, follow them. A lot of people fail in the markets because they set rules, but they don't stick to them. I would like to end this video by giving you some real advice from someone that's been in the markets for a long time, seen everything happen. And this is like some stuff you should avoid. You should avoid thinking that you're going to become a millionaire overnight with starting this $1,000, right? If it was that easy, everyone would be doing it. But if it was impossible, no one would be doing it. That's like one of the best things that I could tell you right now. The other thing is like, the only way you can do this like as a full-time thing and you can really focus on it is if you get into like the trading side of it and you actually trade it and try to make a daily income from it, because obviously we need money coming in every single day to survive. But if your focus is something like a good long-term return, instead of like investing in the real estate, investing in stock markets, investing into bonds, instead gives you that good return, right? Stocks give you a return. But then there's crypto. Like for us high intelligent people, or should I say for us very high risk tolerance people, we've got crypto available to us that has shown returns of, let's say, 500-600% over like a couple months that is not available with any other assets out there. Remember, nothing here is financial advice. I'm just someone who's here, is crazy enough to put all my money into crypto and see where it takes me. And if you're crazy like me, click the subscribe button. Otherwise, I will see you in another episode.